Hey folks, Dan Frio here, the rate update. What we're going to talk about today, it's June 23rd, 2021, post Federal Chairman Powell in front of Congress. What happened? Stock market rallied, mortgage rates went down. Find out more. Don't go away. Be right back to unpack this whole thing. Okay, so kudos to Federal Chairman Powell on what he said to Congress yesterday. Federal Chairman Powell, he heads the Federal Reserve. He spoke in front of Congress yesterday and must have hit it out of the ballpark because the stock market went way up yesterday and mortgage rates came down. Today, mortgage rates are flat and the stock market's kind of flat, but it beats a crash. So let's go over a couple things. First, I want to explain to you what the Federal Reserve, what their purpose is. And then we're going to go through the two main mandates that they have. And then we're going to talk about mortgage rates and what I expect them to do for the next week or two. Okay, so let's get on to it first. So the Federal Reserve has two mandates. One is full employment for the U.S. Okay, and I'm going to tackle that here in a second. But number two is price controls, mainly inflation. So that's the first one I want to cover. So let's go over first off. Their first mandate is price control. So you can see right here, the headlines this morning was U.S. stocks trending higher after positive remarks by Federal Chairman Powell to Congress. Okay, so kudos to Federal Chairman Powell. All right, so the next thing is, this is from Federal Chairman Powell. It says, I would emphasize, though, that we are fully committed to both legs of our dual mandate. There it is, maximum employment and stable prices. Okay, so that's what their purpose is. So let me just give you a background. Full employment, there's really no such thing as 100% employment. So they want it down to about a 3 or 2% range or so forth. So I'm going to tackle that in a second. But inflation, they really like their benchmark of inflation to be 2%. Okay, so let's keep that in check. All right, so first thing is we're going to talk about the jobless claims. Jobless claims show surprising increase to the highest level in months. Okay, so when you think of that, it's like, okay, there's still tons of people filing for unemployment. Kind of odd. And I'm getting to something and I'll show you why. The United States, it says the U.S. Unemployment rate dropped to 5.8% in May of 2021, the lowest since March of 2022, and below the market expectations of 5.9. So you're thinking, well, that's good, Dan, right? Hold on. Adding to the side that the job market consolidated its recovery as the economy further reopened. Okay, still the rate remains well below the 3.5% that we saw in February of 2020, just before the virus tore through the economy. A steady decline in the number of daily corona cases due to the vaccinations has allowed authorities to lift restrictions on businesses. But here's the key thing, but employers have been complaining they cannot find enough workers to respond to the growing demand. Okay, remember that part. Here's another one. The number of unemployed people declined by 496,000. That's fantastic. However, it's still at 9.3 million people need employment. Okay, so you remember that 9.3 million. Okay. The next thing we're going to see is there's 25 states that that's ending the $300 extra federal unemployment benefit. Why? And people are going to say, Dan, you got this from Fox News, and so it's skewed to the Republicans. Well, I try to be fair. I have Yahoo Finance here. I have whatever this one is, Fox News here. I have CNBC there. And I have the Trading and Economic Times there. So I'm all over the board. I'm trying to give you data to not fit a narrative, but to give you the facts behind everything. The main reason what they're saying is we need to get people back to work. And if you go through a lot of these details, they're saying they just cannot fill these vacancies. Okay? Let me prove that to you. Remember this number right here, the 9.3 million people still unemployed. Okay, there's a thing called the JOLT index, and I reference it every month that it comes out, and it probably goes right past your head, but there's a reason for that. The job openings and labor turnover summary, that's what this is. Okay, it was published June 8th, so just this month, not too long ago. It says, headlines, the number of job openings reached a series high of 9.3 million on the last business day of April of 2021. Okay, so there's 9.3 million job openings. There's 9.3 million people that need jobs. So you take it from there. I'll leave it at that. But there's a lot of job openings for those that are looking for work. Okay. So now the next piece of the puzzle, the other mandate that they have is inflation, jobs or price stability. All right. What we're seeing there is the Federal Reserve is saying it's going to pass. All right. And here's basically their terminology behind this. Federal Chairman Powell came in and said, yes, there are pockets of hugely increases in pricing, such as used cars. Used cars prices are skyrocketing because of the chip shortage. Manufacturers can't make cars. You also have to remember we came from when the country was shut down, so there was very minimal production and nobody buying anything. You couldn't buy anything. You go to the grocery store and they're out of meat. You want to fly somewhere to visit somebody, you can't. You want to go to a baseball game, you can't. You want to go out to dinner, you can't. So we've never been in these times before. So you had a shut down economy, opening it up. At any point, you're going to have rampant inflation during a small little segment of time. And again, another backdrop on this, and it makes some people kind of a little ticked off at me. They leave comments below, but just think of this: you have a forbearance program that's going through with the mortgage in mortgages. What a forbearance is when you can postpone your mortgage payments. A lot of people got into that program back in March of 2020 and are still in it through September of this year. So let's assume you don't have a mortgage payment. Student loans are also being deferred. You don't have a student loan payment. Those two areas are the biggest expenses you're going to have probably in your life other than a car. If you don't have to pay those two bills for a year and you're still working or making maybe more money on unemployment than you were before, you're going to go out and spend the money. Okay, so that's the backdrop of all this. So Federal Chairman Powell is saying this is going to run hot a little bit, but it'll come back to normal first and second quarter of next year. We're not going to do anything until we truly see this come through. Now, next year, if things are still running hot, they're going to jump in and do something. So we're all on pause right now for that. Okay, so now let's get to where mortgage rates are and why people follow me on a daily basis. People follow me on a daily basis for this. They want to know what's going on with mortgage rates. And they follow us. Here is where, we fit a huge void for people. We want to consult with you if you're looking to buy, build, or refinance your mortgage, or you're in a forbearance. We're not that place you're just going to jump online, click, get approved, close in maybe a month or 2 or 3 or 4. You're going to get this great rate initially, as long as they can close you on time. And also, please watch the costs involved. But let's say you get out there and you get this fantastic program. God bless you. Where we want to help people is we want to be your consultant. If you go to Charles Schwab and you just buy stocks on your own, maybe we're not the person for you if you're looking to do the same thing with your mortgage. But if you want consultations, you want help, you want to know why, what, where, and when we're doing this mortgage, why we're putting you into that program, what programs exist, what are the fees, what are the rates. We monitor rates, lock you in at the right time. So that's what we do here. So people follow me on a daily basis. They want to know what's going on with rates. So this is what I do on a daily basis. I follow this. This is the mortgage-backed securities market, the MBS market. It's a bond that trades on Wall Street every day. And as this price goes up, here's where it gets a little confusing. When this chart goes up, that's not rates going up. That is the price of this bond. So as the price moves up, rates come down. So let me break this down in its simplest terms for you. A bond is an agreement between two parties that when you redeem your bond, you get a set price. So let's say this. Let's say I have a $100 bond here that next year at maturity, you're going to give me my $100 back when I hand you this bond, okay? But today, I'm going to pay you a high price. I'm going to pay you $100 today. And next year, you're going to give me $100 back. So I give you $100, you give me this bond. Next year comes by, I give you the bond back, and you give me my $100 back. What was my rate of return? 0. There's no rate of return. There's no interest rate on that. It's 0. Okay. So let's say the price goes down. All right. So now the price goes down to $50. So I give you $50 today. Next year, you give me $100 back. What was my return on that? 100%. I just doubled my money. So can you see the lower the price? In that case, we went to $50. We had at $100, our mortgage rate was 0. At $50, our mortgage rate was 100%. So as the price goes down, the rate goes up. So we follow on a daily basis what's affecting this price. Should this price go up today? Should it go down today? And that's what I follow, and I share with you all the economic news that's plays a part in the role of all this. So we saw since last April that there was a nice rally in the market all the way through May. But then you see right here that it plummeted. What happened this time last month? Federal Reserve news, inflation news, and it spooked the markets. Then we hit stability. Then what happened? Federal Reserve news came out, and it spooked the market of inflation. Federal Chairman Powell came into Congress, talked, and he stabilized the market. So my expectations is we should stay stable right now, okay? What happened today alone, let's just take a snapshot of what happened today. It's kind of all over the board. You see a huge buying out of the get-go, and then just stay stagnant all day, and we ended up 2. I don't care if we, are at 0 or 2 or 5 or 10. I would rather have a green and up in price than a down, because when you go, remember, lower prices mean higher rates. Okay, so that's what's going on there. Economic calendar. This is what plays a huge role in a lot of this stuff. And what I mean by stuff is mortgage rates and the mortgage bonds. Yesterday we had the Federal Chairman Powell. He came out and spoke, and he helped ease the markets. Today we saw new home sales. They were basically in line to what they thought they were going to be, down a little bit. But what's affecting a lot of home sales is there's just no inventory. And somebody was arguing in one of the posts the other day, oh, there's tons of inventory in my area. Well, you can find little pockets. There might be a lot of houses for sale, but in general, you can find this study all over the country. There is one of the lowest number of homes on the market that we've ever seen, and you can find all kind of publications on that. Okay, so that's my analysis for today. Here's who I am. My name is Dan Frio. I do the rate update every day. I run the Frio team here at Preferred Rate, and we're hoping we can become your mortgage consultant. If you're a realtor, we'd love to work with you. We have an online application. We can issue you a full approval for your clients. So when you're placing that bid in, you're not just pre-approved. We've already had you underwritten, and we can help you win that bid. If you're looking to build a home, a lot of times people have issues with their builder that they cannot lock in for more than 60 days. There's many parts of the country where we can lock in your loan for 1 year. So the best way to find out more about that is to call us, and I'm going to give you that information here next. If you're looking to refinance, if you're in a forbearance, you're looking to refinance, pull out cash, you're just looking to refinance, maybe save some money, please give us a call. We'd like to work with you on that, especially the forbearance piece, just to give you all the options that you have available to you. And if you're looking to refinance, we'll help you structure it, because we don't want you to go back to a 30-year mortgage unless you have to. Some people, that might be the only way they can put food on the table today. But others might be, I just want a lower rate to lower my payments. Well, what if we can keep the same payment and cut off 10 years of your term and save you $100,000 in interest? That might benefit you. You might not even know some of these ideas exist. So that's what we're here for. How do you find out more about me and my team? Well, the first thing I'd like you to do is just go to our YouTube channel, The Rate Update with Dan Frio. There's over 900 videos. We did peak over 14,000 subscribers yesterday, thanks to you guys. So you should be able to find a video here that kind of tickles your fancy and educates you on anything that you can think of. And if there's something on here you cannot find, please reach out to me and let me know a video you'd like me to do. If you want to find out or reach out to us directly, you can go to The Rate Update. That's our website. All this stuff is down below in the description. You can, start your application, you just click here and you're on your way. If you're looking to buy or refinance, you start the application right there. If you're like, hey, I'd rather talk with somebody, perfect. We have an 800 number. It's 844-775-LOAN. Call us there and you'll get one of my mortgage consultants or myself, and we would love to help you. What most people are doing right now, they're going to our calendar and they're setting up a 15, 30, or 60-minute consultation. It's really simple. You jump in, you find a time, a day and time that's available for me. You click it, you find the time, you click it, and you're on your way. You'll get a confirmation with a phone number to call me, and at that time, that day, you reach out and I'd be more than happy to go through all of your questions with you and maybe get you on your way to either home ownership or saving you some money. So that is it for today, guys. Thank you so much for watching. Don't forget to give me a thumbs up, subscribe down below, and hit the bell. Every time I post a video, you get an alert. God bless, guys. Take care. I'll see you tomorrow. Bye-bye.